Welcome to the show. Today, I reflected on a poem for the poets out there, The Road Less Traveled by Robert Frost. Two roads diverged in a yellow wood, and sorry I could not travel both. And be one traveler, long I stood, and looked down one as far as I could to where it bent in the undergrowth. What are you talking about, Josh? I'm talking about staring at the charts and seeing two clear paths forward. One, a major flush down at rejection. The other, the arrival of a much needed bull indicator that's not on the table yet. And I'm going to break it down when we get to the SPY. These two roads are before us, and I'm watching it like a hawk. I've got my good friend here, Tim from Investing Bros. We're going to break up some news stories. We're going to react to the CPI. We're going to talk about a couple trades that I got into, one late today, so it's hot and fresh, and you guys could go back and look at it. Maybe I'll get Tim's opinion on it and see if he would invest in it. Me and Tim are both technical analysts. He's got his own show called Investing Bros. Hit the like, guys. If you're new to this page, then don't delay on the subscribe. We do technical Tuesdays. Today we're doing it Wednesday. Off a little bit this week, but we do those every single week. We mostly dive into crypto, but we definitely cover both. Tim, how are you doing today?
Doing good. Staying extremely busy. And again, like you said, we're doing Technical Tuesdays on Wednesday. I was very busy last night. Have a busy rest of my afternoon. In fact, after this, I'm on an X Space later tonight with some guys from Wolf Finance. But one of the signs that you're doing well is staying busy. This is the field that when there's nothing to do and you're not doing anything, that's probably a problem. So I'm happy to be very busy right now.
Okay, well, I had to post this comment from BitBoy. We are at a crossroads, but remember, September is the worst month of the year. That is historically true. Septembers have been some pretty bad months. We are in an election year, and so we do have to keep that into consideration. And we're in a news-driven cycle. We've run up for a year and a half. We had a 10% correction, so maybe the worst is behind us. We've recovered 6%, over half of it. Today, the island indicator was canceled, technically, based on where we closed. Are we out of the woods? Well, I'm gonna go into that SPY, and you know that I've studied it, the two roads before us, and I'm going to break it down for you. But I got a comment. This is probably not the real BitBoy. It could be the real BitBoy. But there was a little bit of tea, crypto tea, a video between Charles Hoskins responding to BitBoy. I'm not entirely sure what BitBoy said, but Charles Hoskins, one of the co-founders or the founder of Cardano ADA, lashed back at BitBoy, and because I guess he had been criticizing the network and calling it dead. And Charles Hoskins said the only reason why BitBoy was bad-mouthing him was because BitBoy had been trying to get some sponsorships and he just wouldn't cough up the dough. Now, I don't know if any of that's true, but I asked my good friend Tim here, who actually has some background in history with BitBoy. And what did you say to me, Tim?
Yeah, I'm going to say no comment. I'm going to say no comment when it comes to BitBoy crypto.
That's what he told me that he could say, but I still had to lay it out there. And what I told him is that I respect the man for taking the high road. All right, so we've got a big, kind of a news day. I'm just going to go through a couple news stories, and we're going to react to the CPI. I promise you it's going to be a good show, specifically when we get to the SPY and the overall market direction and Bitcoin. We've had some great calls and predictions on Bitcoin, and I think we might do it again. So a news story that stood out to me, breaking news story yesterday, was actually UBS reported their earnings, and they smashed Q2 expectations. That's a bank. They posted $1.14 billion in profit. And, you can't have a bull rally if the banks are doing poorly. Now, some of the banks gave some mixed results. Mostly, I thought they reported well. And now we have a bank here in Europe producing a pretty incredible Q2 report. And, it's another feather in the cap for the bulls. And we need to begin to count these, because I'm definitely going to count both sides of the bulls and bears and see who's going to end up winning. Any comment on the banks, Tim?
No, I've been following some of the news that there's concerns about potential bailouts coming or collapses, which historically have actually been good for the crypto market during this pullback into a bull market. But at the moment, no, I want to see a little bit more develop before I take a strong stance on how that affects markets necessarily.
Swift Snail, which is just a little bit ironic that he said Ada is a dinosaur. Swift Snail might know the dinosaurs with that handle. I'm glad you're here, Swift Snail. All of you guys, I appreciate you. Dean Levy, Eugen Sky, Nice, Davey, Dean Levy, Zio. Appreciate all of you guys being here. One of the questions I see here that I'm going to pull up is there a correlation with the S&P 500 and Bitcoin? I occasionally answer this question, and what I've observed in comparing them, doing a chart comparison, is that there have been times when they have run together, and there's been times when they've taken, like the Robert Frost poem, two different paths. And so I don't believe that they have to run together. Currently, they have been running together. Bitcoin has been largely moving with the NASDAQ, going in a risk-off, risk-on scenario with the overall market. But they don't have to run together. How would you answer that question, Tim?
Yeah, I think you hit it dead on. There's periods of times where they're mimicking each other perfectly, and then, I mean, recently I'd make obviously today they split in different ways, but I would even say, I mean, take a look at Bitcoin. Bitcoin's been in a correction technically since March. In that same timeline, the S&P 500 just continued to set new highs every single week. So there's been, even on, I'm not gonna say macro, let's call it intermediate, over the last couple of months, it's been kind of diverged over the last couple of months, and there's a level of if you're a crypto investor or looking for maybe the next spark in Bitcoin, but you're also concerned about the S&P 500 and the stock market as a whole, that divergence might not be a terrible thing, because we could see a flip where right now the S&P 500 is positive and Bitcoin's kind of more negative. Do we see a period of time where that flips and we get that healthy correction even more so? Maybe, we end up finishing S&P 500 down 15 to 20%, which would still I classify as a healthy correction for the market, but you get that pump in Bitcoin, that divergence stays intact. And then after election season, maybe December, January, we see them recorrelate and go off up to the moon together.
I actually don't disagree with you at all. Other interesting news today: Google facing increased regulation. The stock dumped. I held puts, which I was very nervous about the day before, because the Google puts had deteriorated in value. I can't remember, about 30%. But I still had a good feeling, because there was a couple candles at the top of the range that were just ominous, and the MACD had clear bearish divergence on the 1 hour and the 4 hour. And so I thought, you know what? It's not really strong. It's not making any new highs. Nvidia's come up quite a bit. That's been my bull play of the week. And so I stuck in those puts, and this morning got 100% on those. Those are the type of calls that we're making in the Chart Goat University, the Stock Squad Patreon. After this video, which is not going to be a very long one today, we're going to do a very short video over in the Discord, guys. So why did Google drop? Well, there was obviously some selling pressure, because there's news of more regulation coming down the road. Washington, D.C. is going to go after these big tech companies. And you might say, well, why? How do you know that? Well, nobody knows anything for certain, but someone who spilt the tea on coming regulation was Warren Buffett. Warren Buffett made the comment that in his meeting recently, one of the reasons why he sold half of his Apple position was he was concerned about the rising cost of our debt. We're spending 80% of taxes that are coming in are covering the interest only on our debt. And so he said, the federal government's backing themselves in a corner. They're going to have to raise some cash. Bond sales have been going poorly. Okay, so bond sales is where the government sells their debts to foreign countries. And in the last bond sale, people didn't show up to buy like they normally do. And so when other countries aren't buying our debt, and our interest payment alone is way out of whack, you guys don't need an analyst or a news anchor or anybody to tell you that if your entire paycheck was going to just cover the interest alone on your debt, that it would be time to file bankruptcy, or you just have to walk away. Warren Buffett is concerned the federal government is going to have to do something and scramble and raise some capital, and they're going to have to do it. The only way that they know how to do anything is through taxes. And so even though he wasn't bearish on Apple overall as a company, Apple taking positions with AI and growing, he was bearish on the coming regulation and increasing tax burdens that might be down the road. And so he was, we're in a favorable tax situation now. So he locked in the gains. Very smart move. This is what pushed Google down. Google is facing regulation, and I think it does not matter. You might say, well, Josh, is it better to go Democrat or Republican? I mean, who's going to protect big tech? And I'm going to tell you, nobody. Nobody's going to protect big tech. Whoever wins in November, you might say one candidate over the other might do a little bit better, but the truth is the government's backed themselves in a corner, and regulation is coming down the pipeline. And I read to you guys, some of you might remember who are on this show regularly, in January, I read to you that Goldman Sachs does an outline for the year. Now, they're not always right on everything. They get plenty of things wrong, but I actually find a lot of what they say very interesting. And two things that stood out to me at the beginning of the year is they said that there was going to be increased regulation this year and that there was going to be increased global conflict. Well, we're seeing it. Google is the first victim of that. Any thoughts on that, Tim?
No, I didn't even know they made that prediction earlier in the year. That's a pretty good prediction. They're batting pretty well on those calls. So that's interesting. It definitely is something to keep an eye on. There's two things, what you just said. There are two ways that the government can create more money. And the truth is they're probably going to want to do both of them. Like you mentioned, they can raise taxes. The other thing is, of course, with the inflationary dollar we have, they can just start turning that printer back on in excess and print our money into oblivion. It's going to be very interesting. But, I don't know if you got to catch, did you watch or listen to, I guess because there wasn't a visual, did you listen to the Elon and Trump conversation on Monday night?
I didn't see all of it. I got little snippets of it. I did get a AI breakdown of their key points.
That's good.
And again, I'm going to give an opinion on that opinion, and I know it's going to fire some of you up. Based on the little bit that I read, and me and Tim may or may not agree on this, it did appear to me that Elon had a little bit more sophisticated answers for some of the global problems that were being discussed. Now, that's just an opinion. Some of the things that Donald Trump had said in response, it sounded as if they were a little bit more cliche and a little bit more derived from, you could say, his previous presidency. There's some real concern about building a proper energy infrastructure. Okay, there's a real concern about that. And Donald typically says, we're going to drill, baby, drill. That's a meme comment from previous 5 or 6 years that got a great crowd response. But I actually think, and I'm getting way off subject here, I actually think that that's true. We need to have unrestricted regulation, environmentally conscious, unrestricted regulation to go after our energy here in the U.S. It appeared that from some perspective, Tim, and I'll throw it back to you, that some of his answers were a little bit pre-packed. And it appeared if this were like a debate for president. I read a couple of things that suggested that Elon actually had some more broader views, both on global conflict as well as energy and a couple other topics. Now, I didn't necessarily watch it for myself, but that was some of the interesting talking points. What do you think? You listened to it?
Yeah, we listened to the whole thing in our Discord. And so you're never going to bottle up Donald Trump. You can't stop him from going where he wants to go. People joked that it was an 80-20 split, 80% Donald Trump, 20% Elon Musk in the conversation. I believe that's generous. I would have pegged it closer to 90-10, if that. Once Donald gets going, he goes. Donald has a way, for someone who's so wealthy and has been, been held in a high regard business-wise his entire career, he speaks very plainly. And I think that's even what kind of you're kind of referencing there is Elon, so intelligent, so sophisticated. He's spoken things higher. Donald Trump speaks to people like you're having a casual conversation at a local bar, and it's just two guys shooting the breeze about their thoughts and how things work. He doesn't talk in complicated language. He talks very simply. He uses very simple language to describe what he wants. I thought the biggest takeaway, and the reason I was referencing this is because we were just talking about it, the best part of the evening was when Elon Musk turned the conversation into a potential, what he called government efficiency department, and implied that he would be willing to help out with that. And in a roundabout way, Donald Trump, low key, he actually kind of almost offered him 2 jobs during the conversation. He kind of offered him a job to help with this efficiency department. He also asked his assistance and help when it comes to redoing public education. And I think Elon would be phenomenal at both of those. But yes, I think the whole concept Elon really got into and what Trump was so excited about was he said, yeah, no one knows how to cut like you. And he was referencing X, how Elon just walks.
Which I thought was a little bit. Well, was that what he was referencing? I was wondering if it was him being in the thick of having to cut profit margins on Tesla in the last year. But he probably was referring to the X platform setup.
Yeah, he was referencing. I mean, didn't Elon? I don't know if I'm getting this number correctly, but it was something like 80%. Like he owns Twitter, and he realizes we don't need anywhere close to the numbers of people that you guys have hired here to run this platform efficiently. And so that's how I read it. I guess he didn't say what he was referencing, but the implication of what he did with Twitter, because that was part of the conversation now called X. He's like, yeah, you know how to cut, you know how to do all this other stuff. And I'm telling you, that's something that I think if it didn't, it should have stirred up a lot more people to be excited about that potential future. And here's the thing, when it comes to presidents, the presidency, that seat, it's the most powerful single seat in the world. So whoever sits in that seat, it is important. But borderline more important than who sits in that seat are the people that sit around that seat and help advise that seat. We found that out in Nashville. Donald Trump is going to be a pro-Bitcoin president, despite the fact, if you listen to him speak in Nashville, pretty evident he doesn't know much about Bitcoin in the crypto space. Who he surrounds himself with is a much bigger impact on what he would accomplish as president. Who Kamala surrounds herself. Let's say Kamala wins, because that's at the moment where it looks like things are going, even though things could change later. It's not really as much about her as it's who does she allow to be in her cabinet? Who does she put around her to advise her? Because she's not going to know how to make an informed decision on every single thing that crosses her desk. Donald Trump's not going to know how to make a decision on every single thing that crosses his desk. We all know we have problems, and rarely is it the actual president who solves the problems. It's who he hires. And effectively, that makes him CEO. Sometimes being a good CEO isn't fixing the problem. It's hiring the right person to fix the problem. And I think Elon Musk can fix a lot of problems.
Let's take a quick station break. Guys, hit that like for me. We got a lot of viewers in here, and I've got a goal in these videos, because if we reach the certain amount of likes, it pushes the video out to more viewers. So if you're appreciating the content, we're going to get into it more. Off the politics here, I have to acknowledge Sonia Green. She sold her Google stocks yesterday on the upswing, which was a pretty smart move. A couple other things here I wanted to... Larry was right about Elon and Trump together. We're remembering Larry today. I believe that Keenan Grace is going to do a video on his page today, and I'm going to be dropping a video there tomorrow. Make sure you don't miss that, and just go over and watch one of his videos and hit a thumbs up. He's dealing with death in the family. All right, we're going to get into some hardcore stuff. I want to get the content out. I want to drill on tech stock content. Let's talk a little bit about the CPI. So we had this soft CPI, just like a soft PPI, came in better than expected, and the markets went sideways. And I'm going to tell you why here in a minute, but I just want to take a minute and examine the CPI. I want to show you a couple charts and give you some data, and then we'll get Tim's reaction. So I'm going to review for you the CPI reads that we've had so far this year. 2024, January, 3.1. February, 3.2. March, 3.5. April, 3.4. We began to turn the corner in April. May, 3.3. June, a nice drop, 3.0. And then July came in at 2.9%. Now, that is the best read that we've had in 2024. And you would think that the markets would have loved it and been off to the races. Why? Because it nearly gives a golden pass to the Fed to finally begin to cut rates. But I wanted to explain to you why the markets didn't exactly run. And here's the concern, because we're waiting on another data point that comes tomorrow, Thursday at 8:30 a.m., and that's we have to take a look at unemployment. The problem that we got, and what one of the things that spooked the markets, not the only thing that's spooky in the markets right now, was the rise in unemployment and the fear that the Fed had waited too long to cut rates. And so what the market wants, guys, is they want a Goldilocks environment where inflation comes down without unemployment going up. And so what they want is to have seen inflation come down before unemployment went up. And what made the market so mad is that unemployment started to tick up before inflation had really cooled, and we're not at 2%. And so that's what the market's upset about. And the market feels that the Fed might be behind the ball at this point, and they're not getting the Goldilocks environment. And if you're not in a sweet spot, you can't afford to be heavily risk on. You've got to take some money off the table, and that's exactly what we got. So real quick, I'm going to just show one chart, and then we're going to get Tim's response to it. Let me just pop this over real quick. So what we're looking at, Tim, is the 12-month percentage change for the consumer price index. And specifically, this is less food and energy. And it shows you an entire decade, or actually 2 decades, from 2004 all the way to 2024. And if we don't got to keep it, we can keep it simple here. The fact is that we are still way above the average inflation rate. And so even though we're moving in the right direction, we're not in a low inflation rate environment. And that's also another concern. The market, we're not down as far as we were in the decade in which we had high liquidity and the markets were screaming forward. And so people are concerned that we still have a ways to go. Tim, what's your thought on the CPI read today?
Yeah, when I saw it, so there's a couple things to break down. I do believe it's long-term bullish. I think it is long-term bullish. As you mentioned, it's going to probably, with the combination of what we see with unemployment, give the green light for a very slow and casual pivot in rate hikes and actually get into a season where we're going to be going into easing and they'll cut rates. I think right now a lot of people still anticipating, I think actually at the moment CME is anticipating 100 basis points cut by the end of the year. I think the more realistic probability is 75 basis points, so not quite a full percentage point. But I think that what happens, I told my community, don't be surprised because we rallied into the event. I told my community yesterday I was still short-term bearish on Bitcoin. And if we rally beforehand, we're probably going to crash after just to eliminate all of the hype because that's just how these markets seem to move. And I didn't know actually how perfectly that call was going to get because if you were to look at the 1-hour chart and take a look at where we pulled back to today, it almost perfectly is a double bottom from where we started to make a run late last night early yesterday morning around 7 a.m. Bitcoin was hovering right here below 59,000, started to rally, waited in anticipation. And I think there was a handful of people, despite the numbers of the data saying we were expecting 3%, I heard a lot of rumblings, Josh. I don't know about you. I heard a lot of rumblings about 2.8, maybe even 2.7. And so 2.9, obviously, it's the best inflation data we've had since March of 2021. That's not to be overlooked, but it was something that we had a little bit of a rally yesterday coming into this. We've now pulled back down. This is one of those situations. If retail misses the boat, who cares? But if the whales miss the boat, they bring the boat back. But check out what this boat kind of does. It brings us back down to a level of support. If we turn on levels of LUXALGO, we're seeing a lot of support here on 1 hour. And then if you were to go lower time frames, like the 30-minute and lower, a lot of support in this range where people wanted to buy. I think if we went lower, because we came down here pretty quickly, if tomorrow data doesn't look, as Josh is saying, with the unemployment favorable for rate cuts for any reason whatsoever, I'm keeping my eyes on 56 and then potentially even 54. There's some liquidity. I think I was looking at Ondo last on this, so give me a second here. Got to put in BTC. This is a liquidity chart that just shows where longs are processed. Let's go to the 7-day here so we can see this and appreciate it. The bright yellow here is where there's positions of high liquidations. So longs below current price action, shorts above current price action. You can see some bright yellow here. Again, 57 to 56.5 area. Some pick up some more here at 55 to 54. And then there is some deck back down below 50,000.
Hey,
but I'm keeping my eyes on this bunch right here.
Can you quickly for those who are a little confused by the chart, because some are totally new to this. Can you take a really brief moment and just explain what you're looking at?
So bright yellow liquidations. This is positions where now,
let's even go. Let's even go to what liquidation is.
Well, let me explain. If someone's entered a long right now, they have a level where whether they have put a stop loss or whether they're so heavily leveraged that they'd be completely out of the position, they have data that goes into their exchanges that tells everybody where their liquidation point is, or the level where their long or short will be exited. So right now, when you see these bright yellow spots on the screen, these are levels with high liquidations or high liquidity, where on the low side, that means if we hit 57,400, there will be, and I think it says, there's going to be millions dollars worth of long positions that are killed. Even more so, if you come down here to 56.5, there's even more long positions that will be killed. If you come to 55,000, even more long positions that will be killed. If you look at the upside, anything above here, these are short liquidation levels. So anyone shorting the market, they have liquidation levels, or their sell order will be canceled if price were to get up here, say, to 62,900 or 63,000. So these charts, the reason this is significant is because this tells us the broad space of how a lot of traders, even retail investors, are moving their money around. It tells us where they bought in, and it tells us where we can move price to get them out of the trades. This is called open interest. And I know this is kind of complicated, but think of it this way. This is the retail people. If you believe in manipulation, and I think a lot of us have seen evidence of this a lot, this is the chart that tells the experienced traders and the whales and the institutions where they could manipulate price to flush people out, to take the money away from the average retail investor so that they can buy the dips and then increase the price. Not all of these levels are hit, but it's pretty uncanny how often you can be in a season of bullishness. Everything feels bullish, but you see this high liquidity level down low, and all of a sudden the price starts making a move down there, hits that level perfectly, and then rebounds to the upside. It is so that you, the retail investor, you don't make the profit. The whales and the experienced traders make the profit. That's why this chart is so significant, to tell you of potential places the price could be manipulated down or up to, even if the whole market is bullish or bearish.
Yeah, I want to remind you guys that we're not trading an electronic digital ledger. All right, we're trading. We're not trading our keys here. We're trading a paper ledger, essentially. It's basically, these guys hold Bitcoin on their books in a very secure place. And when you buy Bitcoin, it is simply a data transactions of zeros and ones. You don't own it. It's over in a stockpile, probably even leveraged in some way. It came out during the last winter. All of these companies that didn't actually even have the Bitcoin that they had reported that they had. And what happens is, the smaller the exchange that you might consider working with, they might be doing transactions. I'm just going to give you like a generic idea, $10 million, right? And they only have $1 million worth of Bitcoin. Could be $10 billion and they only have $1 billion worth of Bitcoin, but they're collecting fees. And so what the larger market makers do is they go after the transactions. They're not, it's not a concern to them. They have a strategy of holding Bitcoin that's entirely unrelated to the price. You follow me? They're trying to accumulate it so that they can then leverage it out to more customers. And so what they're looking for is transaction fees and liquidation of individuals. Now, the money that they had put in on the speculation, that money becomes theirs, pure profit. So they're profit hunting liquidity and profit hunting high transaction areas and high transaction zones to increase their profits. That's the game. That's the manipulation behind all of this. And there's been some hardcore evidence. You don't really see it, but in the wintertime, when everything was dark and people were ignoring crypto, there was a guy that took the time to go and look at all the different exchanges and how much Bitcoin was available. And it was more Bitcoin than existed. And so it was essentially at that moment, unequivocal evidence of what I just outlined for you guys. And I can tell you, if this random dude could come up with this report, you surely think that Gary Gensler could do some oversight and moderate this for the sake of retail customers, but that's not what he's about. All right, I wanted to get back. Let's get into the SPY real quick, and we're going to come back to crypto here in a minute. Let me know if you guys have been liking the show so far. If this is helping you, hit the like for me, hit the subscribe, and don't sleep on going over to Investing Bros and subscribing to Tim's page. I love what he's doing over there. I'm gonna take you guys into the SPY. Actually, I'm going to talk to you about the VIX real quick, and then I'm going to get Tim's reaction on that, and we're going to look at the SPY. But let me take you guys into this. All right, real quick heat map of the S&P 500. We've got some green, we've got some gray, but clearly it's largely a mixed day. The only thing that was really working out of big tech was NVIDIA. That was a marginal pop-up of 1.67%, and obviously we're moving towards earnings, and so people are being willing to take a little bit more of a risk, while people might be selling into fear. Wall Street fear gauge in record retreat after last week's massive spike. What are they talking about? They're talking about the VIX, which measures volatility, and this chart is fascinating, and I wanted you guys to see it with your own eyes. So we hit a spike of fear represented in the VIX last week above 60, okay? And the only two times where we've hit in that level in the past was COVID. The COVID spike down got everybody afraid, worldwide, shutdown of financial systems. That's obviously a big one. And then before that, it was the 2008 financial crisis. So extremely rare to hit that high on the fear index, and it happened last week. Okay, so now this chart is saying how many days does it take after we've hit these high levels of fear, how many days does it take for the market to calm down? Well, let's look at this. Back in 2008, this tallest bar is actually the great financial crisis. And so when fear spiked right at that moment, it took over a year for the markets to get out of fear and to calm down. Okay, and then we have COVID. Let me dial that in. COVID, we actually had two major spikes, one in 2020, and that took 276 days, again, almost a year. The next one came in 2022 when we went into, I don't know if people are calling that a recession. I refer to 2022 as a recession. We came back 30%.
It was a recession. We have some people in Washington that claim it wasn't, but by the old definition, it was a recession.
Yeah, exactly. So our 2020 recession, when fear spiked in the midst of that and the downturn that came, it took 285 days for that to calm down as reflected in the VIX. Guys, what does it mean that we had a pump in fear that was as significant as COVID and the Great Recession, and each of those took a year to calm down, and we've calmed down in 7 days on the VIX? I got to come back and get Tim's reaction on this one. Somebody's lying. Either we should be terrified and the VIX is getting ready to take off like a rocket ship. So either we should be absolutely terrified or somebody lied big time. What's your opinion, Tim?
In the world of YouTube, it's about we really, people like Josh and me and several other influencers, we really want to add as much value to you guys as possible. But we have to do things, say things, put thumbnails out there that catch your eye. Some people call it clickbait, but that's the world of YouTube entertainment. I had a thumbnail that was like about this back on the 5th. I said they lied, and a lot of times people use that and they just kind of clickbait you in. But I fully believe that there was a full blown lie. Richard Wyckoff teaches the concept of the composite man. You have to trade the markets as if it's all one person, one entity working always to manipulate data, news, charts, and everything to steal your money and take it for themselves. And let's think about the fears that came in almost all overnight. And it was a little bit of a black swan event when you throw in the Asian markets, right? The Asian markets crashed. We saw Japan, Taiwan, and Korea all have historical drops in their markets while we were all sleeping Sunday night, at least if you're on the East Coast here in the United States. But even I think if you're pretty much anywhere in the U.S., you're probably at least thinking about sleeping. My point here is that was kind of legitimate, but what were the other things they were really afraid of? Guys, unemployment's really out of control. We're going to go skyrocket up high. Inflation's not under control. A recession is coming. Also, by the way, you remember that conflict over in Israel? Iran is literally probably tonight going to bomb them, and World War III is starting. there was a accumulation of so much what we call FUD. That's an acronym for fear, uncertainty, and doubt that hit us that weekend and early that morning that the markets woke up. And I told my audience over in my Discord, I said, hey guys, these are the types of moves that precede bounce backs and potentially your bottom situations. I predicted it correctly. Within 24 hours after we were convinced the world was ending, borderline, oh, actually, no, the Asian markets bounced back. Oh, Iran didn't invade Israel yet. Now they keep putting that out here every single day that something big's about to happen, and maybe it will, but it didn't happen then. Oh, remember that recession scare? Yeah, actually, you're not that bad. Unemployment actually is lower than we thought. Oh, inflation, it's looking like inflation numbers are actually kind of favorable. And we had a 24-hour period. We thought everything was falling off, and then everything was okay. I don't believe in coincidences, Josh. I believe in manipulation. And I believe that there's going to be a very special bull market coming in still. But the whales needed a taste of that 49K. They needed to pull back to levels we hadn't seen since the beginning of the Bitcoin ETF. That's my belief. It's part of the reason why I don't think we're dropping back below 49. I think we could reapproach 52. I think we might even see potentially, I don't think we're going to, but I think there's a chance you see a double bottom. But I saw that as a massive lie, a massive manipulation. And I said this earlier, but I'll say it again. There's a saying in investing that when the retail misses the boat, when you and I miss the boat, it sucks. Just try to jump in when you can and take the ride. But when institutions miss the boat, they find a way to bring the boat back. Institutions missed out earlier this year on that $49,000 Bitcoin price after the ETFs were launched. They found an opportunity, an excuse to bring the prices back so that all their buddies could buy that cheap level. That's my belief is what happened here over a week ago.
Well, I think I like that answer, and I'm going to let Tim play the bull, and I'm going to play the bear. But I want you to remember my starting poem. Two roads stood before me, and I spent a long time staring down both paths to consider which way these markets were headed. Now, I don't have the answers, but we're going to take a peek, and I'll enjoy sharing this with Tim. I'm going to show you guys the SPY and some predictions and videos that I've made over the last year. We're going to take a look at it, and then we're going to come back, and in the same way that I'm going to give you my overview of what the SPY is telling me, I'm going to let Tim kind of talk about Bitcoin, and I think there's some correlation between going with a bearish view and the bullish view. I'm not bearish, but I've spent more time concerning myself with the bearish path because we've already come up a lot in big tech this year. Goldman Sachs, I'm not, maybe I'm a Goldman Sachs guy. They said at their 6-month market review, they said that the majority of the gains for 2024 had already been booked and that the year would probably end flat, which means that we could go up, down later, or go down and back up later, that the majority of gains for 2024 have already been accomplished. Let me take you guys into the SPY, and I want you guys to get the reaction on what I'm looking at. Give me a minute to switch over here. Okay, I got it all decorated for you guys. The SPY is a Christmas tree. Let me go over what you're looking at. Now, in the last couple of days, I've talked about this classic reversal signal called an island top. And 2 days ago, I introduced that to you guys and said that the only way that this would get canceled is if we got a candle to cross above the neckline of the island top. And I said, and that would be the first stage of canceling it. The second stage of canceling it would be to get a candle that opens and closes above 541. So both of those have been accomplished. This is essentially at the moment a fully canceled island top. And we could easily be moving to this V-shaped recovery. I see one path ahead of us, and I'll call this the bull path, is that we have a full-blown V-shaped double top. We would get some pullback, bounce off the 50 again, and continue on into 2025. That's my bull view. I've largely got this decorated to show you some of my bear concerns, which I think are important for us to analyze. You can see that we came back up here in April of 2024. This was our first major correction right here, okay? And this has given me a descending wedge, which is, for all purposes, bullish. They typically break to the upside. They're continuation patterns. We previously had an ascending wedge here, and that ultimately peaked out. You guys remember I had those lines drawn for over a year. That ultimately peaked out, and that broke to the downside. Ascending wedges are bearish. Now we're in potentially a bearish or bullish ascending wedge. I did a video right here on this doji day back in July 8th, and I titled it, "It's Over." And in that video, I said, we will go on to make a new high of at least 560, but the trend has shifted. And you need to consider very carefully over the next couple weeks if you're going to be taking any profit in the Magnificent Seven. If you need to lock anything up or book it, book the gains, consider it very heavily. We were right here in the middle of the year, in the beginning of July, and I said, the type of bull run that we were in had already changed. If you remember my logic, it's because we failed to get to the top of resistance. And that was important. The only way for that run to have continued would have been for us to have gotten to the top resistance line. It's not currently drawn, and to have trotted along the top. We didn't. I saw weakness. I saw bearish divergence. And so I declared that the bull run as we knew it was coming to an end, and you had limited time to react to it. Obviously, and I said that we would get 560, but that would be the peak. And I did a video just days after we hit 560 and said, we're in a blow off top. How high can this go? I only covered half of the Magnificent Seven at that time. And I said, okay, let's just get crazy and think about where could the top prices for all of the Magnificent Seven be. Now, a lot of people interpreted that video as bullish, but in my mind, when I made the video, I was trying to prepare people for what an absolute, you'd be nuts not to take profit scenario. I did that video on the day that the market peaked. And from that point forward, we obviously had a near 10% pullback. So in this last week, I identified this island top warning, right? And today we've gotten a decently bullish candle. But the two things I want to draw your guys' attention to today is that the last 2 days of this run-up, we've had significantly reduced volume. Each day that we gapped up and then we moved up today on near 50% less volume. The actual number is negative 40% volume. And so in that scenario, as I've said many times, you've got trifecta of three dynamics for a true bull run, and that's price, which is your trend, volume, which is your strength, momentum, which is your acceleration. And there are two components fully missing from this market, and that's volume and acceleration, strength and acceleration. What's happening is the price is moving up very algorithmically, but we are now against this white descending line of resistance. You guys can see, and this, may come in relevant. I may be getting this right again. We'll see. I don't know. We now have 3 touches defining if we do get a rejection right here. We have a defined wedge at this point. We have got a defined resistance line. Now, the way that we want to fully cancel out this idea and fully cancel out this line that I've drawn is we've got to, and we didn't close above the 50 MA. That's the blue line. And that's where we need to get above. And you can see, just going back a little bit in history, the last time we broke beneath it, we did come back. And the first time we touched it, we rejected. And so I wouldn't be shocked, since we have not gotten a candle to open and close and break through the 50 MA. It wouldn't shock me at all if initially this descending line of resistance holds and we come back and have to bounce off the 100 SMA, which is the yellow line. So let me get back. We'll get Tim's reaction, and we're going to get into Bitcoin. And then someone had said, Josh, do you have some actionable content for me? I want to make some money. I do. I'm going to get into a handful of important charts. We're going to go really fast through a lightning round at the tail end of this. But Tim, that's my view on the S&P. It's not, I focused on the bearish, but if tomorrow we get above that 50 MA and we press through the price and then we open and close above it, we'll just be building to move back to 350, 350. Let me get the exact number for you guys. We'll be moving to, we will be getting back to 552. I apologize. 552. 300. The market is not crashed. Your investment are safe. 552. So if we get above the 50 and we close above the 50, we're going to make our way to 552. And if we get to 552, I would largely think that we'll end up getting a full V-shaped double top. And that's where I'd become more risk off at a double top. But tomorrow, and the main point of this time that I've spent staring down the road of the S&P 500 is just to tell you guys we're not out of the woods yet, and you need to be cautious. The volume is missing, and I can tell you something about being a decent technical analyst is people ask me, how did I get good? I'm going to tell you the number one way that I have shown some strength in this area is simply that I believe the charts. I have found people that are better analysts and they know more about the technicals and they've analyzed more deeply various aspects of the Fibonacci and Wycliffe and all that. But what they often do is it doesn't influence the way they manage their money. They look at all those things and they ignore them. They're still bullish. They're like ever bulls or they're ever bears. It doesn't matter that they see the charts. They don't accept what's in front of their eyes. If I get anything right in my trading, it's because when things don't add up, I accept it. I always say this to, recently, we're in the process of selling a business, my family, and I've been in a lot of conversations in discussion with my son who's overseeing those negotiations, and I've repeatedly said to him, no is just as good as yes. You can't go into the negotiation being fearful of the no. You have to accept both of them and have a plan for both of them. And I would tell you guys that you can be bullish as much as you like, but you've got to have a plan for the no. If the market says no, you shall not pass this 50 SMA, what's your plan? That's why we're flushing it out today. Tim, what are your thoughts?
Yeah, I want to just even echo what you're kind of saying here at the end. You know, I tell people all the time, if it's not broke, don't fix it. There's a lot of people, you know, Josh and I are both chart guys. We do some things similarly. We do some things differently. But ultimately, he has found what works for him. I have found what works for me. I tell people all the time, don't overcomplicate the technical analysis because sometimes when you do too much, you start to second guess yourself and you might look really cool and your chart might look really sophisticated. But at the end of the day, isn't the end goal just being profitable? And of course, there's that meme that dumb people, they're going to make money because they're too stupid to buy and sell and buy and sell. They just hodl and they end up making money long term. And then there's really intelligent people who realize the more you get in and out and second guess yourself, the worse you'll do. And then there's the middle people who just try to overthink everything and they ruin themselves. They sell every single bottom. They buy every single top. And I'll tell you guys this, keep things simple, find what works for you, educate yourself on stuff. But if you have a system that it's not broken, don't try to fix it. I love what Josh said there at the end as well. I'm a big advocate of you plan for both directions. Technical analysis and any type of analysis in the markets is simply trying to increase your probability of being correct. But at the end of the day, every single time you buy, you are gambling. Every single time you sell, you are gambling. You want to have as much confirmation as you can, but you're never 100%. So with that being said, even if you feel confident about the market going in one direction, that doesn't mean you don't have a plan in order in case you're wrong, because you probably have learned from history, you're not always right. And those are the best investors, the ones that accept when they're wrong, but they have that backup plan already in order. They keep their wits about them. They stay calm. Those are the winners. Hopefully none of you guys have ever seen me or Josh make a mistake and said, oh, these guys know nothing. Hopefully you've watched us be wrong, but then explain why we were wrong and explain to you what our other plan was. And then that one ends up killing it. And that's exactly how you guys need to be doing this at home. Plan for both directions. There's that famous quote, and I'll end with this one. If you fail to plan, you're planning to fail. That applies so heavily to investing. Have a plan no matter whether you're right about the direction or wrong. Have a plan for both sides of it.
Appreciate that. You know, we're going to get into some charts and some plays that I want to draw to your attention, and we'll get Tim's opinion on it, but we're going to wrap it up. So we're going to be doing a little bit of a lightning round. I'm going to show you some charts I've got. Tim, if you want, when I'm done with these charts, you can respond to them or you can show a chart that's of interest to you, but we're going to do a lightning round. Each of these charts is just going to be a few moments. I've enjoyed the show, Tim. I've enjoyed doing this with
Yes.
you. Great show, guys. I hope that you guys are enjoying it. If you are, the way that you let me know is by hitting that like 515. I agree with one of the comments there a minute ago. I mean, if I don't get 1,000 likes on this video, it is a little bit like an insult. But I know that you guys love me, and I know you love Tim. Let's just take a minute and hit that like. Okay, DraftKings. This chart has to be talked about today. It was a good day for DraftKings, and it was a good day to buy calls and make a nice bag. A beautiful move up, 29.57 all the way to 33.59. The IV wasn't too bad on those, the calls, and so super profitable opportunity. Having said that, I have not in recent days seen a more classic head and shoulder pattern that has been completely confirmed. It's completely confirmed. And so, this and head and shoulders typically play out 80% of the time. I've got the 50 MA here, this time in yellow. And let me just double check that. No, the 100. So we are beneath the 100, which in general is bearish. We're beneath the 50. Okay. So we've back tested and rejected off the 50. We're beneath the 100. We're hovering above the 200. We have an absolutely defined and confirmed head and shoulders pattern. I'm gonna just tell you guys this right now. If for some crazy reason we backtest the 100 MA and we get to anywhere around this neckline of $35, it's $35.40 to $35.70. It could be that those who jumped into shorting the stock got a little bit of pressure against them on a bullish day. But I can tell you that this is a pretty shortable event, in my opinion. And it just seems like it's making its way to 200. Support, structural support, guys, is right here, very well defined. This chart is so dang easy to read. We have the 200 MA, and we've got all this structure back at 25.40. I'm definitely looking for opportunities to short this. At this moment. So on a shorter time frame, like the 15-minute, 30-minute, any cross beneath the 5 or 10 EMA, I would be looking for shorts tomorrow. Now, this move, depending on how you view it, because there's people that say that you take the shoulder height, not the head height. But if you take the head height, it's going to, at bare minimum, it's going to get you down to 18, which is also clearly defined structure. These were clearly defined structure at 18. And so it would make sense that if we went into a bearish trend, that DraftKings could get beat up pretty bad and spend some time underneath the 200 before recovering. But if you go by the shoulder, that gets us here to the 25.40. So keep your eye on DraftKings. There's an actionable event. There's a trade setup. There's a chart for you guys. If those who are looking to make some money, I just gave it to you. Let me go through a couple others. Now, Google had a nice little bounce. I want you guys to see it through my eyes. I just want to go long term for you guys real quick. We have another interesting scenario. Watch me do it. Give me a second. We have a pretty classic head and shoulders pattern developing here. Now, you guys will hear other technical analysts talk about it in the future, or you could just listen to me talk about it right now. I'm concerned about this, and don't make jokes about the drawing. It's not about the drawing, people. We're trying to make some money here. And so that 200, it seems like the stock, again, beneath the 100 in a potentially bearish environment. It already sold off despite the fact that other stocks have shown better relative performance. We're on the bottom half of an ascending channel. What is an ascending channel? It's bearish. We're on the bear side of a bear channel underneath two bearish SMAs. This is, again, a long-term, potentially shortable moment. Bare minimum back test to slightly under the 200. I see a head and shoulders there. That's where I would be wanting to take a long risk on Google. And we could get another move up at that point. And later in the year, this would be November, right about here. The end of November might be an opportunity. We'll see what happens long-term. Do I know that that's what's going to happen with Google? No. I just showed you what I knew. I showed you the patterns I'm watching. These are continuation patterns. You see them right here. ascending channels break to the upside. We're clearly in a third ascending channel right above the 200. We're not going to touch it. That'd be surprising to me. If you wanted to play this safe, okay, I'm just going to give you guys a trade idea. You could put your stop above the middle of this channel. So we're beneath the channel. If we back test the middle and get rejected, that could be a great spot to take a 30-day or 2-week position to the downside, okay? And then you would just take the risk that you could get stopped out if the price went above the middle of the channel. And, this is one I'm definitely going to play and continue to the downside. Look for another 100% on this. All right, there's another actionable trade plan. And now I'm going to steal some of Tim's thunder. We're going to talk about, he doesn't really care much for the meme coins. But I shouldn't keep saying that, Tim. I apologize. I know. You just tell me, one time you say one thing and that's it. You're labeled for life. Let's talk about some Doge. People want to know what's going on with Doge. So Doge, I'm amazed that it got to 8 cents. That's Doge went back into winter. Okay. I cannot believe that we've gone from 22 to 8 cents. Now let's talk about some of the bullish situations. The bullish situation is that we have, again, let me just go through it. This is both an opportunity to learn and an opportunity for trade ideas. We have a bullish descending channel on support, right? And it's a historic support. This is definitely a very strong support. This is the support in which Dogecoin initially launched from. We came back and touched it, and there were buyers ready to buy there. Now, 10 is another support. Okay, quite a bit of resistance at 10. Now we are beneath it. We back tested 10. We got rejected. We're beneath the. Let me just double check which. I think that's the. That's the 50. That's the 21. So we're beneath the 21. I'm probably imagine that we're beneath the 50 as well. We're beneath the 21 and the 50. We're back testing the 50. Let me pop that up. Yeah. So, we have some strong moving averages that we're beneath. We are facing down this bear at the middle of the channel, the 21 EMA. And do I think that we'll get there? I would kind of be surprised if Bitcoin even goes sideways and slightly up. I would think that Doge is going to continue to climb up until this 12 cents. I'd be a little bit concerned about watching how it reacts to 12 cents. I like risk on Doge at this level. I'm overall, but I have to acknowledge that it is down in the dumps. And we are still facing this 12 cent 21 EMA structure resistance. So remember, it's both the moving average and structure resistance at 10. If we get above that, I think we'd be in a pretty bullish moment on Doge. I'm going to stop. I'm going to do another chart. I'm going to do 2 more charts for you guys, but let me get Tim's reaction to Doge. And you don't have to go into the chart, Tim. You can just give me your opinion on the chart I just went through.
Yeah, I think for me to explain my point, I probably need to look at the chart because there's some things that I think were similar, but I want to make sure people see, even maybe from a LUXALGO perspective on my chart. First thing, and maybe you mentioned this as well, but while you were doing it, I was doing some of my own charting. Look at the significance of this portion historically, this level of 9 to 10 cents. You go back to resistance in 2021 during the early phases of the bull market, but then look at the resistance that has been used after crossing back below it here in May of 2022. Look at the levels of resistance in that area. And with the exception of, as we talked about before, the big kind of manipulative move of last week, we've been using it as support once again. And I'll give people some hope here on Doge, and then I'll crush your spirit. It's going to be a very quick, we're going to say something nice and we're going to say something mean. We hit our take profits on the daily chart. We hit our order block. Now it's printing pink like it's a bearish breaker block, but I really like this more as a level of support. And then when you come in here, we're not quite flashing my buy signal just yet. The money flow is still negative, but that oscillator is in a spot that historically is a great oscillator buy spot, even shorter term, at least back up to where you see this channel, that smart trail of resistance would suggest we should come back up and touch this channel again. And then eventually these falling channels, Josh talks about all the time, will it break bullish this time? Will it have to wait for one more pullback? it'll eventually break to the upside, and I do think the bullishness will resume. That's the good side. Even the weekly chart, I like what I'm seeing, touching support, getting the oscillator back being low. I have a lot of reasons to be bullish longer term on Doge right now than I'm bearish. You can go off my screen now. The thing that I'm going to tell you that's going to hurt your guys' feelings is there's a large portion of price action on Dogecoin that depends upon Daddy Elon Musk, or he's been also called the Doge father. He's been extremely quiet on crypto. And while we thought maybe there was a chance the conversation with Donald Trump would coax out some crypto talk, there was nothing. He has not talked about Doge. He's not been negative. But I'll tell you this.
He has shown not an ounce of love for Doge this cycle yet. And I'll be honest, I'm a little bit disappointed. I don't know what's going on with that. It's a little bit off script for him. Sorry, go ahead.
Yeah. Yeah, well, I'll tell you this, though. The only thing I'll speculate, I said it was in bad news, but I'll tell you, Flip, what it could be good. I think Elon's extremely aware of his influence. He knows every single time he says Dogecoin or Bitcoin, those are the main two he's discussed, that he can seriously affect price. We know that he has the goal of X not just being the premier social media platform, but he wants it to be a financial hub. There is going to be crypto on X. There's going to be a financial platform there. But does he realize his influence and understand if I start going crazy about talking about crypto, it can cause prices to go up, 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 up. In reality, I want to stay silent on it right now. I want to work in silence. I want to get all the supply that I need to get to launch my financial platform. And then when the time's right, all he's going to do is tweet something like Doge and eyeballs. And then you're going to see price go up and down. He's not going to even say anything bullish. He's just going to tweet the word Doge with maybe a set of eyeballs. And that's your sign it's on.
Yes. I'm looking forward to it. It's the only reason why I'm holding Doge this cycle. Otherwise, I felt very confident in other coins, Bonk and Brett. They've been clear winners. Doge was a clear winner. We came up from 8 cents. I called it a heavy buy at 8 cents, and we did get up to 22 cents. Now, that brings me to a topic of expectation. I know that there are folks that I gave some expectations of a possibility in a very bullish Bitcoin cycle of Doge hitting 36 to 40 cents. That's in a bullish Bitcoin cycle where we break above 80K. So that's my high-end prediction if we see Bitcoin break above 80K. I know that people hear 36 cents, but they don't remember the technicals that I gave along with it. I also said that in a perfect environment, we could make an all-time high on Bitcoin and get to $1, but we would need to have a fury of excitement, which would consist of Bitcoin being above 80, Doge being around 38 cents, and then Elon comes out and strikes, and he says that he's going to add it to the X platform. And on that news story, I'd buy the biggest bag you ever saw. I could drop 6 figures on it in a heartbeat because I would be that confident that Doge would hit $1. But again, remember the dynamics that I gave you guys. So let's talk bearish today, and I know that's no fun. But if we don't get that, and we get a Bitcoin that gets rejected below 80K, but we do move back up, the top price for Bitcoin in that scenario might be 18 cents. That's what I said.
For Dogecoin. For Dogecoin?
Doge. What did I say?
Yeah, you said Bitcoin. I was like, 18 cents. Oh, my goodness.
Thank you. I need someone on the show with me to correct me when I say things wrong. My wife diagnosed that years ago. It's called Nornwexaphasia, I believe. It's where you ask for a spoon, but you really want a fork. Okay. She took a psychology class and diagnosed me all sorts of ways. It was really quite fascinating. All right. Let's go into 1 or 2 more charts. And I'm sorry, I promised a quick show, but I hope you guys are enjoying this. I'm having a good time here with Tim and these charts. All right, I just wanted to cover CleanSpark. This is another trade kind of similar to Doge that I'm interested in. I started buying at 1053. I bought some more here on the dip that we got this week. And so I've been averaging in, and I just want to be very clear. Yes, if Bitcoin breaks down right now, and you saw Tim's chart that it was sitting on support, so anything could cause it to break down. Markets could break down. News event could cause it to break down. So we're sitting at the bottom of a channel, and it wouldn't shock me if we got a breakdown and we saw a flash similar to Dogecoin dropping from $10 or 10 cents to 8 cents. Here we are roughly around $10. It wouldn't shock me if we came down, touched this Lux support at $8 and got a full recovery wick back into the channel. Now, I am prepared for that. And I just want to be clear, guys, I'm giving you my trade. So if someone said, I want actionable content here, I want to be able to make some money. First of all, you do you. This is what I'm doing with my money. I'm looking to acquire CleanSpark underneath the channel as a potential bear trap, right? With the belief that we will come back and get into this area of between $18 to $20. This is a nice swing idea for me. I've already initiated it. I'm prepared to buy in this zone. I've got it set to a daily buy. If we got a flash down to $8, I would lump sum buy. At the moment, I'm just daily buying, daily averaging in. I do have a stop loss set. I'm kind of tempted to turn it off, but it's set at 990 right now. And I have an alert set so that if we were to flash down and I got stopped out, I would literally be looking to rebuy back at 8, because that's kind of where I think it would go. Now, there's no guarantee that we'll get that. Bitcoin could have already made its low. You heard Tim talk about that. So that's why I'm buying now. Someone would say, well, I should just wait till it gets to 8. It might not get there. Okay, it might not get there. We're in the channel now. So that's why I'm buying now. And again, people were hyped up on this. There was tons of buyers buying the top up here. At $23, I wasn't. Now I'm here, I'm buying the bottom. Everybody doesn't care about CleanSpark except for me and a couple guys. So you can do the math on that, whether it's a good investment for you. Let me give you a bearish indicator so that you can move slowly. This is the MACD on the weekly time frame, and both lines are pointing down, okay? And so we also have an extension here of the red bars, which is showing that not only are they pointing down, but they're spreading apart and the selling is accelerating, okay? Now, what we want to see to get a clear buy signal or a clear reversal signal is we want to see this bad boy cross back up. And since we're above the 0 level, that would be an extremely bullish move. And you could say that that's why I'm just DCAing and not lump sum buying, because on that cross would technically be another place to scale. So you either scale the bull move on the cross, or if you're interested, you scale at 8. All right, that's another trade for you. And I'm going to give you one more. I alerted this one in the stocks with Josh. Discord, the Chart Goat University. This is kind of doing what I wanted it to do. DocuSign is oversold. Let me just jump into a weekly time frame so you can get a picture of that. It's come down quite a bit. We've got some of these same patterns that I show you guys all the time. We have already recently touched the bottom. We've broken back above the middle. We're strong likelihood that we could get back up here to 57.45. My take one profit is at 57.45. I entered these this evening. I think my next one's at 59, and my last one is at 65. And there's another trade setup for you guys. That's exactly what I got into today. I'm going to bring it back to Tim. We're going to wrap up the show. If you guys liked those trade ideas, man, you got me begging here on YouTube for likes. 680. I just feel like, I don't feel like I did a good job, and nobody liked it if I don't get to 1,000.
Josh,
come on now.
This is what I tell people. Anyone watching right now, because there's still over 1,000 of you watching. Think of it this way: get your workout of the day.
Likers. Those are some stingy likers.
Burn 1 calorie. Flex your index finger, smash the like button. First, you might have to move the mouse over the hand, but then just burn a calorie, click that button. It's absolutely free. It doesn't cost you a single thing. Even if you hated every second of what we said, you can still smash
till
like.
The end. And stay till the end.
You can still touch like.
Burn
a calorie, smash a like.
Guys, don't sleep on Investing Bros. I think that Investing Bros is not, they're in a slightly descending bullish continuation pattern. They're going straight up, guys. It's not on this page. So hit the subscribe here if you're new. but make sure to go over to Investing Bros. He is largely more crypto content and
Yes.
definitely giving those deep dives. If you need more attention on your crypto portfolio, get it over on Investing Bros. Guys, you saw on our charts the LUXALGO indicator. That's something else that we do on Tuesdays is sort of teach that. If you don't have an investing strategy and you don't know how to find support and resistance, and I do, but the LUXALGO indicator takes time out of my day because I can do my own research. Sometimes I just use it for confluence, but if I need to get a quick idea of where I should be strongly considering taking profit on a trade, Lux tells me. I just showed it to you on the DocuSign chart. The strongest, I would be kind of foolish to not take profit if we got close to that $65 mark, because it's going to go up, but it's not going to continue to go up at all times. It moves up and down, folks. It's an exchange. I'm going to leave it there. Tim and I are going to go do a quick, short 10-minute conversation over in the Discord. It's not going to be a live. I'm going to record it, and then I'm going to post it. And we're just going to talk moving averages. And I just thought I would get a minute because he's a technical guy. And I thought, let me get him to chime in on some moving averages. And it's going to be a quick micro class for this week. Appreciate each and every one of you guys. Thank you for hitting the like. Tim, thank you for being here today.
Absolutely.
Peace and blessings. Take care, fam. We're just going to stay on here.
Yeah.
I'm just kidding.